Thanks for joining me, gentlemen. So we're going to be sort of trying to cover, and perhaps it's a bit too broad to be able to cover it in sort of 35, 40 minutes, but the outlook for gas markets, what's the sentiment towards gas at the moment? What are some of those hurdles that we're seeing? We'll perhaps take a slightly more Eurocentric view, but it will also look at gas globally as well as we go. But just before we start, could you all just introduce yourselves, give us a very quick rundown of your background and what you've done in the industry so far, perhaps work our way down. Volker?
I give it a try. I'm Volker de Jong from GG&I. We do business development in areas where gas plays a role in the energy mix. I was also the first managing director of a business school on natural gas built with Gazprom and Shell. So I have a lot of business opportunities that we now try to do are based on the network we created. My focus now is on Mexico and Egypt, doing business up there with some of the venture capitalists that are behind us.
Hello, I'm William Powell and I'm the editor-in-chief of Natural Gas World, and I've been writing about gas for the last 20-odd years. We have a website and we have a magazine, and it's all about gas and the future, really, of energy markets.
Frederick Terrian, advisor on Philex International for capital and strategic developments. We're also a developer of LNG and natural gas assets in North America and Europe and Asia.
Okay, thanks, gentlemen. So throughout the day, we've sort of heard mostly about oil, but people touching on gas. We had some presentations from some corporate presentations focusing on gas, and the thematics generally are quite pro-gas. When we look at sort of electrification, gas-to-power projects, this notion of cleaner fuels, ESG investing, if you like. With all that in mind, how do you see the gas markets globally at the moment, and what do you think are the sort of potential stumbling blocks that we're faced with at present for the market to reach that next level of development?
Well, I think this is quite a large question, and it's an international market, so there are many answers to this same question. I think even though it's getting more and more a global market, there's a huge difference between, say, the American market, the European market, and the Asian market. If you look at Europe, which you asked, you can see, of course, for many years, it's quite stable demand, and even though a lot of people don't want to be too much depending on Russian gas, the share of Russian gas is growing. We have a tremendous infrastructure there with pipelines now also with reverse flows. But still, I think especially the political situation in Europe is always a bit, after the first Ukraine crisis, a bit vulnerable. A few months ago, I was with one of the big transportation companies. You suddenly see they are connected to Nord Stream, one of the big pipelines of the Russian gas. And suddenly they have to really take care that the sanctions that the Americans are threatening with don't hurt their business, even though they are not in Nord Stream themselves, but connecting to some of these pipelines. So it's especially this political issue that makes the gas market in Europe, compared with a lot of the other areas, different. So if I go to Mexico, where I'm a lot, you see the Gulf of Mexico is booming, and Mexicans are dreaming of producing oil and gas and growing their business again after Pemex. And in the Middle East, you saw especially Egypt, where they are dreaming to get their gas market together to create an energy hub and to become a major player in this world. So for an investor, you have to look at the regional situation very well, and being also a member of the IGU, you feel that the gas industry itself somehow is worrying a bit about this renewable energy issue. So that is, and so we are looking to what we call gas advocacy. But if the industry starts saying that, that means they see a challenge into keeping their product in business in the next decades to come.
So a competitive issue around renewables?
Yeah, that's a competitive issue, but also, I mean, in the end, you talk always about what we call license to operate. That means the financial players want to invest in you, the politicians give you the regulation that makes it possible, and all the other stakeholders, like the consumers, etc., still want you. And I already told you I'm from Holland, so I live on top of this Groningen field where you see earthquakes. And within a few years, we changed from a almost the center of the gas industry, dreaming of being a gas hub in Europe, to a government that says, no, 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 you're not allowed to build houses anymore with natural gas. Completely the opposite. And that's surprisingly done not by rationale, but it's done by media and events that are taking there, and the gas industry is not trained to deal with that. So we suddenly are hit by this irrational arguments, and we are not a player in that are very strong in that sense.
I take a different view on that, if I may. I find that there's an integration play, especially in Europe, that is. North America as well, where the pipeline infrastructure has become very developed.
Yeah.
There's been a decoupling with the directives that has created an enormous potential for new entrants, as well as renewables to grow and strive. Yeah. And then, of course, and that's obviously backing the intermittency of renewables, so it has limitations. And then, of course, is creating a lot of E&P activity in the North Sea that you're starting to see, maybe not in Groningen, and I agree. It's a very developed, mature environment to be drilling, but in the North Sea, there's a lot of potential on the back of the developments that can happen, as well as the decoupling of the infrastructure that's already taken place over the last 20 years. Currently today, we have about 200 kilometers of pipeline across Europe. Yeah. I'm not sure about the North American number, but that's quite a couple $1 trillion investment that's already been laid out over the last 50 years. Yeah. Now we've got a new opportunity to actually develop further that infrastructure across the North Sea, across some of the East Med, which is opening up today, that has a tremendous potential to grow as we decouple from the 40% dependency from the East. So there is a lot of opportunities in the market, and I don't necessarily see the problems with the advocacy more as I see the E&P industry trying to get together on a collaborative basis to try to come forward with supply chains that will make lower for longer, and a transition fuel, we didn't mention that, lower carbon footprint across the industry.
Yeah, I think there's been a lot of investment in the upstream, a lot of M&A activity. New companies have come along, like Sega Point, for example, or Neptune, and they're basically focusing on what the UK government calls the maximising the economic returns of the North Sea. So I think what it's seen really as is small little pockets of gas and oil, which otherwise would be never recovered because they're too small for the majors. But what it's seeing is it's very much the minnows coming in, or developing fields with maybe a 3, 4, 5 year lifespan before they get sold on again. So it's all kind of quite sort of short term, but it all boosts the idea that Britain, is improving its production. We've sort of slowly halted the decline in output. That's been partly because as well of government measures. They've improved the tax regime. They've allowed transferable tax histories now, which has improved the M&A activity upstream. Going down to what is talking about pipelines, there's been a huge revolution in the way there's operated now. Separated as they are from the supply companies, they're free to introduce their own ways of trading, and so we're seeing reverse flow. And that's mainly about ensuring that the market in Europe is homogenized, so that gas can come in, say, on the Polish-Belarus border and leave, for example, on the French-Spanish border, with a fairly clear route through, and gas can flow eastwards as well now. So Russia can't theoretically cut off countries in the east because, Ukraine gets gas from France, Germany, elsewhere. It's more expensive gas than before, but it is able to avoid the dependency on Russia. So a lot of the politics about gas, which were quite negative because gas was seen as being a Russian thing, those have now been largely eased away. Plus, we've had the huge, the probe into Gazprom and its alleged anti-monopoly position. Sorry, anti-market position, and now gas is now traded far more freely. Gazprom is less able to fix prices. There's been a huge drift away from indexation to oil, and now we're seeing much more of it linked to the TTF, which is the major Dutch hub, instead. So there's a lot more transparency. There's a lot more price discovery going on all the time. Okay, there's still pockets of darkness in sort of Southeast Europe, the Balkans, where Bulgaria, Romania. That's not very, EC minded, you'd say. Look at what Romania's done to the tax regime there. Offshore tax, it's led to OMV and ExxonMobil taking FID later on than they would have done on their Neptune field. So there's a huge amount of, wherever you look in Europe, there's no kind of one-size-fits-all approach. Every country, or many countries have their own attitudes. Poland, for example, that's been the target of a number of attacks by free marketers who say that what they're doing with the market is it's non-commercial. The state's too involved with it. They're building far more capacity than they need, particularly with import pipelines planned from Norway. They're talking about buying LNG from the US. Of course, that could be traded. It needn't go to Poland. But they are doing everything they can to bang the anti-Russia drum. Similarly, the other Baltic states, Estonia, Latvia, Lithuania, they sort of share that point of view, and they're building building pipelines, partly with EC funds, to ensure better connectivity with Finland. And then they got also ambitious plans to bring gas down, through the Three Seas project. And that's what you've mentioned, the Southern Gas Corridor, which is a small amount of gas, but Italy isn't being the mayor of Southern Italy, that province of Southern Italy, has been very obstructive with that. So again, wherever you look, there's an overall picture of encouraging signs that gas is the fuel of the future, but there are still doubts that every country is playing the game on the sort of in a harmonised way by the same rules.
Yep.
Agree with those points. Yeah, thank you.
We've sort of jumped around a bit, but yeah, the sort of overbearing signs are positive, certainly for Europe. But let's perhaps come back to this public perception idea and the notion of a sort of transition fuel, as it were. Do you think that's a sort of fair moniker for what gas's role can be or should be? I think perhaps that's what you were getting at, Volko, when you were talking about the sort of confidence or the perception.
What I say is based on the discussions within the International Gas Union, and of course the experience, if you see in Holland suddenly how opinion can change, which also happened in Germany, that sometimes hits you much quicker than you want. Because I fully agree, we have a mature market, we have LNG import facilities, we have pipelines, we have Nord Stream, we have South Stream, Turkish Stream now. Everything is in place. So with any form of common sense, I fully agree with you. You have a tremendous market with a tremendous outlook. Yet you feel that I think it's more the political reality of 25% populists and 25% Green parties that somehow makes politicians, and that's what a lot of my customers, the big utility companies, etc., say, I have only 3 risks. That's regulation, regulation, regulation. So as long as you keep your act together, and maybe Britain is good off in that sense being in a Brexit, because in Europe it's much more complicated to do this. You can get in very weird situations. That's the way we feel it and the European mainland. Still, I believe strongly in gas. I believe that the best choice will be the coming 20 years to maximize gas wherever you can. But that doesn't necessarily mean that there are a large group not agreeing with us. That's
IEA actually has proven that there's a 50-60% increase in natural gas growth in the next 20 years. The question then is, how do you monetize that? A lot of E&P folks in the room, as you know, once you hit a gas pocket, it's less than a TCF, you don't know what to do with it. So there's a lot of the monetization issues that need to be addressed. Also, because we have that infrastructure and the regulation that tends to allow for tie-ins to take place on a very concerted basis within a tightly knit environment, the next Zohr could be in our backyard. So there is an impressive exploration capital that's available once we do have that framework in place, and allows for that opportunity to take over. The decarbonization is another issue that obviously will be forthright.
So coming back to the competitiveness angle and sort of gas versus renewables, do you see things coexisting quite nicely in the future? We had some stats on gas price going up to sort of $13. Is that from WoodMac potentially?
I think gas
is that a good thing?
Gas has to be very, very careful, because there's a very narrow line it can tread between becoming too expensive and then becoming too cheap to make it worth developing and transporting to the market. There's in Europe we have this European emissions trading scheme, which is so far yielding very low prices. They've begun now to rise, I think, to about €20 a ton. But a lot of people say they need to be around 30 or 50 even euros per ton before you have real coal switching going on. And we look what's happening in Poland and Germany. They're still burning coal in the power sector quite a lot. So you have sort of gas has to make its case. It's not the given that it'll become a natural partner for renewables. I don't think. It depends on what happens with coal, whether nuclear remains on the back foot, and whether renewables becomes cheap and affordable. Critically, renewables aren't yet dispatchable, so you need to have something there when at night time and so on.
Of course. We just have a couple of slides to support some of the conversation.
There was a comment that you made that was very appropriate.
Yep.
There was, I think the AGO had put together. It's the UK one. I think it's the last one.
The price floor, is it?
No, it shows actually the energy mix in the UK right there. Perfect. As you can see, in the last 3 or 4 quarters, we've actually decreased the number of coal fire stations in the UK by a considerable amount to almost decimating its the primary energy use to less than 5-10%. And that alone shows you that gas is here to stay for the next 20 years. The question is how much investment is going to be put in on the EMP side, how much of it will be used to tie in to the existing networks, and then, of course, how transparent, as you mentioned. The TTF is a very important hub that everyone prices on. Can it be a global benchmark as much as Henry Hub? I'm not sure. But there is a great opportunity there for us to actually use that as a transition fuel that will drive a lot of the decarbonization initiatives as well as the EMP industry as a whole.
I mean, a lot of the reason for that, the vanishing of coal, is that the UK uniquely imposed a carbon price on power. I think it's £18 a tonne, I believe. Forget the exact figures. The point is that the European Union doesn't have that. So we immediately, if you like, become less coal-friendly than other countries where they need to pay 10, 20 euros. We have to pay on top of that. So coal, it's largely, I think, a matter of national governments, because if we wait for the European Union, the energy trading, the emissions trading price to rise, you may be here till, well, for a very long time.
It's rising now a little.
Slow, but it's nowhere near the 50 euros you need for...
Yeah. But it's a nice example, of course. If you look at Germany and power production, of course, gas production was put out of the merit order just by investing a lot in renewables, sponsoring that cheap coal coming in due to shale gas. And suddenly, even though you invest in this, I worked for Dong at that moment in time, they heavily bet on this strategy, gas in combination with offshore wind, and it turned out to be the first year they ever made a loss. So you feel that it's difficult for the companies to really operate in such a market where there's a lot of interference by subsidies in renewable energy.
Okay, we touched on LNG within all of that, but let's focus a little bit more on LNG market developments, not just European but globally, and also some of the sort of large LNG projects infrastructurally, but also small-scale LNG and some of those winning projects that are really sort of leading the way. Anyone like to take a lead on that?
Well, as a developer of or fully funded LNG vessel development, we've got a very challenging marketplace because it's a very competitive landscape. But at the same time, we see, according to Novatech, 120 million ton per annum opportunity in the small scale LNG sector. That is also something that a lot of the EMP under 1 TCF discovery yet to be developed can see a huge upswing in small scale. You're seeing a lot of pilot projects across the Mediterranean that are becoming pretty much a template for the rest of the small-scale LNG sector. There is already a 200 million ton capacity in the EU alone, and so and they're looking at the 16 terminals approximately. Yep. About 40 to 50 more are in the pipeline. So it is a huge opportunity right now. People are, in fact, looking at different ways of decoupling from dependencies or interdependencies, if you want to put that slide up, actually. Then you've got an opportunity there to actually change the natural gas landscape with LNG on a very competitive basis.
I think what's worth pointing out as well is that it's becoming a lot. LNG used to be a luxury item which only nations could build, like Japan or South Korean government. They could invest in those. They had a captive market. They could embark on 20-year contracts, and it was all very, very safe and very long term. What's happening now is you're seeing much shorter term, quicker to market developments. I'm thinking about the smaller barges where you can deliver LNG. The tanker can sail away again. The smaller barge can offload the LNG, vaporize it into a power station. This is perfect for small countries or coastal states or archipelagos where pipelines simply aren't economic. But you can deliver a huge amount of LNG in a very short amount of time, very reliably, by conventional tankers, but then have unconventional ways of regasifying it and marketing it, which saves a lot of time, money, and permitting. And basically, more people can join in. So Vitol, Gunvor, the traders without real sort of assets, or many assets, are able to arbitrage the inefficiencies which the majors have created. So there's a huge amount of overspill, if you like, coming into the freely traded market, which wasn't even thinkable 10 years ago.
You mentioned there on the majors. What's the view towards gas then from the majors sort of remodeling their businesses in terms of, we have BP sort of taking on 60%, readjusting their portfolio to 60% gas from conventional oil. Is this, how do you see that unfolding? And do you think the majors are sort of doing enough to sort of move over to this cleaner fuels agenda? Is it because gas is the priority at the moment? What's your take there on some of the majors?
Well, you feel, of course, especially when you look at companies like Shell, they were an oil company and they now advocate that they want to become a gas company. They sometimes try to invest a little in renewable energy. A few times that didn't work out. They were in hydrogen in Iceland, etc. And every now and then they know this is still too small for them to really serve their financial needs. So they need to be in gas, and they're focusing very strong on that. So on an international basis, which is different from Europe, there's a tremendous potential for gas in the decades to come. They know this, and I think a lot of the majors will be players in this game.
If you look at the acquisitions, they bought BG because of its gas assets. Total bought Engie for Engie's LNG business. Yeah. They all see it as the way forward.
Yeah, so the majors really see the role of gas in the future, which is fascinating. If you look at Nord Stream, in the original situation, the Dutch Gasunie was one of the investors, and now Shell is taking over. So you can see the politicians, we're going to draw because it's not renewable, but the business people see a tremendous potential, and they invest in these kind of opportunities, and especially Shell, I know they do a lot in that area.
I think it's instructive that even Engie, which is pulling out of most of its fossil fuels, even they see there's going to be a huge need for gas, as a stopgap until we have this bright new era of everything's electric and there's no molecules around anymore, it's all electrons. Even they see there's going to be a need for something like the Nord Stream 2, because Norway's going to taper off at some point. The UK is already on a downward curve. The Netherlands has basically said we're out of gas or coming.
We stop production. We still have a lot of gas, but we don't produce it. But
that's right.
So
given all that sort of backstory, Engie is thinking, well, let's think where's the gas going to come from? I mean, and so they're buying stakes. They're not buying stakes, but they're financing, particularly not buying stakes. They're financing Nord Stream 2. I think when all this LNG from North America comes on stream as well, I think a lot of that will head towards Europe. We've got so much capacity here. Now, so much unused LNG regas capacity.
It's already happening, absolutely.
Yeah. This week's been a case in point. On the 31st, there are going to be 3 cargoes at least arriving in the UK.
And if you look at the Northwest Passage in Canada, the Shell's investing a tremendous amount for the sale of Canadian gas into the Asian markets, which is the largest growth area. Over 2/3 of all the growth is happening in China, in Japan, and potentially in India.
And that's quite a big narrative for it in terms of emerging markets soaking up that demand, not just for crude that we heard earlier today or oil imports.
Yeah,
but also
I think it's going to complement. It's going to complement the oil mix, and you're seeing a lot of the transportation transformation, into EV sector, bunkering fuel for the IMO 2020 initiatives that are going to drive a lot of the clean bunker fuel for marine power. And then, of course, the power gen is going to be the biggest factor in displacing some of the coal-fired stations.
Yeah, I think a lot will depend on China, because no one saw how much Chinese LNG demand would rise, or gas demand generally would rise. And of course, that came from LNG critically in the last year. Now, we heard this morning that Chinese production, industrial production, is falling off. Plus, China is buying a lot of gas from Russia by pipeline, not yet arriving, but there's 38 BCM coming over the coming 5 years, maybe at plateau. Then they may build the second pipeline. So there could be an awful lot more surplus LNG hitting the market than we're expecting. And that's not even to mention what Qatar is doing with its another 40 million tons a year of output coming on stream potentially.
I agree with that, and the question is whether the demand will absorb that, and I think that the renewables will play a huge role in the intermittency part in building that infrastructure and using that excess gas that'll be driving demand. The question then is how much investment is required for that, and if the capex is available in the oil and gas sector in general, you could see a lot of collaboration taking place very quickly to build out the infrastructure for the 21st century, not the one for the 20th.
Yeah. Critical to all of this, again, will be the question of price. What you're talking about by the oversupply, that's really what gas needs in order to entrench itself further into the market, I think. Because if it's going at $8, $10 MMBTU, it's not attractive. $5 delivered, then suddenly it becomes...
I think JERA actually picked up a cargo for $5.4 on an LNG QMAX. So I guess you're right. There is a lot of that, but that's a lot of organization. JERA has picks up over 235 million ton per annum. So I guess that is a very substantial leader in demand. If the rest of the industry goes in the same way in an organized fashion, you could see more of the economies of scale that we have here in Europe as well as in the US.
Maybe one comment on China. In this IGU group, there was the director of the energy company from Beijing. They replaced all coal-fired power plants with gas. And I mean, it's a bit different from an ordinary market. Once there is a political signal that they want to go for gas for pollution reason in these big cities, they just do it. And a tremendous small time span, there's a huge demand for gas. So I expect that China will move very quickly into being one of the major markets in that area.
And also, of course, having a president who's quite strong, they needn't worry about shale protesters and that sort of thing. They can ramp up
even though, of course,
well.
the old Chinese philosophy is as soon as a leader doesn't bring what the population is asking for, you can change it. Yeah, but the EC is doing a very strong thing up there, and I guess will play a big role in China.
Okay, so what about the storage side of things? If the demand's perhaps not quite there to suck up this insatiable supply that's going to be coming online or is available, how's gas storage infrastructure stacked up to sort of to deal with that supply?
Nothing can beat a tank full of gas, oil, obviously. But there is a lot of the mining sector that's building mass gigawatt storage capacity, and that will take a little time for the transition to take place. There is a lot of the rough investment that hasn't been redone in the last 5-10 years. They're not looking to build out that infrastructure. And there's a couple on the Dutch-German border that's actually been there for a couple of decades.
And they were dreaming, of course, of the Groningen field to stop production, because this is a swing field. As soon as you shut down the swing field, there you go. Suddenly you need other storage facilities.
But at the moment, I think the key right now is the swing state is, in fact, the shale. And if we can LNG it at Henry Hub prices, that's $3, and ship it for less than $8, I think we've got a very good storage in situ opportunity to actually develop over the long run. That's one option. And then the other is, of course, we're counting on the mining industry to actually build more battery capacity and storage, or actually reverse it into electricity or back and forth. Yeah.
Yeah, still, you feel, of course, if you lived on top of this Groningen field, that people underestimated how much storage capacity or backup capacity such a swing field had in the middle of the market. So I think also some of the governments don't, even though you tell them a lot that if you don't have this capability anymore, you need other storage facility. But that's a highly interesting point for of course, all investors, because there will be spikes that are completely different from the spikes you had in the old Groningen field still being in place.
Nevertheless, the spikes haven't been big enough to generate investment. You need to have not just strong intra-winter spreads, but you need to have strong summer-winter.
Yeah, of course, all these spreads are terrible.
And these we aren't seeing, because people know that LNG will arrive like that.
Yeah.
Of course, it doesn't, but people think that it does.
Yeah.
And say, oh, well, I'm not going to buy storage. We get a tanker in 2 days' time, and we're away. But it's reality doesn't work like that.
But still, I think it's only there as soon as you really put the Groningen field out of production. Now you can still make the decision. It's not nice for the people who live there. Well, we need the gas. But if it's not there anymore, then you already could be hurt by the lack of backup.
This always plays into the small-scale LNG vessels that really drives some of this flexibility that you need in the market, and then the storage will actually repair itself in many ways if you have a flexible pipelines plus LNG system in place.
Yeah.
Because the storage capacity today is not sufficient enough for more than 2-3 months, I think, at this stage, in the Europe market at least.
Okay, I just want to quickly come back to the financing of all of this and sort of where the pockets of financing are going to come from in the future. Obviously, it's going to be a mix. It's going to be a broad mix, but you feel that there's more government financing available, more tax incentives for the gas sector, the gas market, as well as the private money funds pouring into it that are going to help propel the gas markets to the next level of development or utilization across Europe and then globally.
Very quickly, I think, looking at Europe, there's already more infrastructure than we need, and we're building more of it. We don't need this many pipelines, but we're still building them because it's a political thing to do, and it creates jobs maybe. But we don't need all these interconnections maybe. We're building them because companies have lobbied for them, and the European Union has money to spend on them. Not a huge amount, but it's going in these projects of common interest, so that where in the past companies would shoulder the risk, knowing that they could then find the market for that gas, now the pipeline builders aren't the gas suppliers. So you've lost that kind of incentive, if you like, to build the pipeline. So now the governments are making you build them as a way of ensuring that we have all the reverse capacity that Europe needs. But if you particularly look at LNG infrastructure, we've got far too much of that. If you look at capacity, it doesn't mean molecules either. Yeah. A lot of these terminals on the northwest European coast were operating at maybe a fifth or a third of capacity in the last couple of years because there simply wasn't the price advantage. Cargoes were going to Asia instead. Yeah. So but that's changing now this year because there's a smaller shipping.
But even though, of course, the utilization is low, it suddenly created the option. And that makes it so very interesting because you're not hooked up like in the old days to a pipeline. You can change your mind and go for American gas. And I think if you put your money somewhere, and there might work quite a lot of examples, go to one of the bordering states, especially North Africa. If you produce gas, you have to compete with the Qatar gas and with the American gas. But if you can deliver, you surely will find a market in Europe for the next decades to come. Even though some governments don't love you, they will need it.
I agree.
Yeah, I mean, Europe was buying Russian gas all throughout the Cold War, wasn't it? There were tanks in the streets of Prague. But the gas kept flowing because Germany and Austria, they wanted the gas, and the Kremlin needed the money. Yeah. So it's brutal, but
highest priced gas, for sure. Back in the 60s, that's for sure.
Yeah.
Very big.
Okay, we've got a couple of minutes left. Was there any questions from the floor for our panel at all? Any questions? No. Just as sort of a concluding point, we touched on price, but we haven't addressed it fully. What are your sort of thoughts or forecasts towards gas price? Is it quite ambitious in the next 3 to 5 years? Are we looking at double digits perhaps? And in addition to that, we've sort of had an idea around, should there be a global gas price or sort of a more centralized gas price globally?
I think the IG was talking about a US Gulf FOB price because there's been a lot of non-committed, certainly non-oil indexed gas coming on board ships off the Gulf of Mexico in the next 5 years. And so they say, well, you just do netbacks to that because that's really the cost. That's going to be what Permian gas or Marcellus gas may be liquefied and tanked. And
yeah, I think the prices will more and more become at least connected. Of course, there's always a transportation cost in between, and there will be some hedging, etc. in these kind of markets. But I think in the end it turns out to be that these markets are so well connected that you cannot be in splendid isolation anymore.
And also not in isolation from each other, but they will be in isolation from oil, I think. I think oil will go its own way and gas will go its own way. I think we've had too long now.
We've already seen the
too much of this
so
indexation. It's time for some common sense approach. And
so that decoupling will continue.
yeah, particularly if gas wants to prosper. Because if it's always hiked up when oil goes up because of geopolitical tensions, then gas is going to be seen as being a risky, dodgy fuel, and let's build more renewables. It's a very, very difficult, as I say, path to tread between being too cheap and being too expensive. But if it gets it wrong, that's it.
Yep, and playing into this perception point that we made at the beginning. Yeah.
And then each region obviously has its own challenges, so not only on the exploration side, but also on the infrastructure that they have in place, or whether they can consume it locally, or they want to trade it on the free market. So that's why it's a very important factor. I see a convergence in some of these. The Henry Hub will be a lead indicator, like the Brent has been for years with WTI. But it's just another question as to how each region will adapt to that from an index point of view to decouple from the oil indexation that we've had over the last 20, 30 years. Yeah.
So 2019 projections, high gas prices ahead?
I personally think I think if they go high, then that'll be another nail in the coffin. They need to be low, competitive, drive out coal, make renewables seem less attractive, and particularly if it does all this, they're being seen as being subsidised and enjoying special favours.
Yeah, I think if you would have an ordinary market without any events, I think the gas price would rise in the coming years. But I know it's so strongly event-driven that something can happen suddenly and you're in a completely different ballgame again. We always underestimated that, and suddenly it could be different. But I think the overall perspective now seems as if you could forecast pretty good prices in the time to come.
And the flexibility in the infrastructure today is capacity is there. It's just a question of utilization levels. The molecules are flowing, both on an LNG and on a pipeline basis. And it's a question of demand factor, which is about building out the infrastructure for electrification, for cleaner fuel on a carbon basis, etc.
Yeah, I think with one, the gas isn't the transition fuel; it's the destination fuel. I think that's what the point we've got to hammer home.
Well, in the end, I think that's not up to us. What I said in the gas world, we started natural gas in the early 60s, and we thought nuclear would take over, and we were selling gas almost for free, and we were sure that in 10 years from then it would be all nuclear, which didn't turn out to be true. So you never know. So we have there were some small issues with nuclear that turned out to be a little bit more difficult than we expected then. So you cannot forecast anything in 5 or 10 years from now. So I think I call this always a nice term, is a VUCA world. It's a volatile, uncertain, complex, and ambiguous. So you make a decision, but you have to look very carefully. And I think the oil and gas industry was always a master in managing and looking at their risk portfolio and make the right decision in such an environment. Much better than the average government or other groups that are involved in this.
Yeah, the IGA actually mentioned that the average gas offtake contract is roughly 6 to 7 years out. So it is still a very valuable cash flow investment that most people are looking at. And because the infrastructure is there's a few bolt-on acquisitions that need to be added to it. You could see a larger energy mix from a gas network in the foreseeable future.
Well, look, that sounds all very positive, although hard to predict. So we hope for a bright future for gas for next year. Thanks everyone for sticking around for that. Could we have a round of applause for our panel, please?